You're going to have awful good staff, or you're going to have burn the candle at both ends. So I thank you for your service and for all your hard work. For millions of customers and small business owners who rely on our financial system each and every day, overregulation from Washington has meant increased fees, fewer services, and diminished access to credit. It's held back both growth and opportunity for the American people. As chairman of the Financial Services Subcommittee on Financial Institutions and Consumer Credit, it's a message I hear multiple times every day, whether here in Washington, back home in Missouri, or traveling through any city or state around our great country. Through the appropriations process, the Subcommittee on Financial Services and General Government has the ability to foster broader availability of credit and promote economic freedom. To me, economic freedom is what makes this country what it is today. Consumer Financial Protection Bureau, or CFPB, has buried consumers and our economy under an avalanche of regulations. To be clear, it's important to guard consumers against discriminatory practices. There is no doubt about that. Yet, in doing so, we must be cautious the enforcement pendulum does not swing too far and do too much harm, do more harm than good. For these reasons, I respectfully request the subcommittee seriously pursue reforms to the CFPB. Chief among them, the placing of the Bureau on a regular appropriation schedule. Such a move would provide greater accountability and transparency at an agency that until only very recently was neither accountable nor transparent. It is also a move the CFPB's acting director and our former colleague, Mick Mulvaney, has said is essential. He was in our committee last week and made this request along with 3 others as reforms that he felt would be important to make the CFPB work better and be more accountable and transparent. CFPB is not the only federal financial regulator that has harmed American consumers and small businesses, in my judgment. We should all work to identify ways to end, once and for all, Operation Choke Point, the FDIC and DOJ-led initiative that seeks to prohibit legally operating businesses from the financial services they need to not only do business, but to survive. Over the last several years, members of the Financial Services Committee and the broader House have expressed broad bipartisan concerns surrounding Operation Choke Point. The underlying problem here is significant. The federal government should not be able to intimidate financial institutions into dropping entire sectors of the economy as customers, based not on risk or evidence of wrongdoing, but purely on personal and political motivations. In October of last year, the Financial Services Committee passed H.R. 2706, My Financial Institution Consumer Protection Act, by a vote of 59-1. That same legislation passed the House on December the 11th, 2017, by a vote of 395-2. This common sense, non-controversial bill would simply ensure that federal financial regulators cannot suggest, request, or order a financial institution to terminate a banking relationship unless the regulator has material reason beyond reputational risk, which quite frankly, the regulators have yet to tell me how they can define. This legislation is so non-controversial that the FDIC has already used its authority to put the provisions into place. For that reason, and given that the House overwhelmingly approved the measure by a near unanimous vote, I respectfully request that the subcommittee consider inclusion of H.R. 2706 in the upcoming FSGG package. I also urge the subcommittee to identify provisions to offer targeted regulatory relief to financial institutions. Under the leadership of Chairman Hensling, the Financial Services Committee has advanced dozens of bills to offer targeted relief to financial firms, banks, and credit unions. Where appropriate, I would urge the subcommittee to consider inclusion of these provisions into your appropriations legislation. My colleagues and I stand ready to work with you in order to do that. Mr. Chairman, I thank you and the members of the subcommittee for your consideration of these ideas and opportunity to testify today. I look forward to working in a collaborative way on these issues and also working with Chairman Hensling and my colleagues in the Financial Services Committee on these and other efforts to promote economic independence across our great nation. With that, Mr. Chairman, I yield back.
Thank you, Mr. Chairman, and let me just thank you for last year. I know you were a champion in this arena, and you have a unique background that lends you to be an expert in this area and a champion for the credit markets and for making sure that our consumers, our constituents, have access to credit. So thanks again for bringing these ideas forward, and I don't have any questions for you. Mr. Cartwright, do you have any questions, or Mr. Bishop?
I do not have questions, Mr. Chairman, but I want to echo your praise for the member for that fine bill you brought up, the Financial Institution Consumer Protection Act. I voted for it, and in fact, only 2 voted against it. So, a nice piece of legislation.
And actually, one of those 2 has actually wished he was voted for it now. He's told me so. It's down to 1. That's okay. We all make mistakes, right?
Thank you for your testimony
Appreciate
today,
the
and
comments,
thanks for
sir.
good work in Congress.
Thank you.
Mr. Bishop?
Thank you. I have no questions. Thank you for your testimony, and I think your points are well taken.
Thank you.
Hey, Mr. Lukemeyer, we'll look forward to doing our best to include some of your concepts, if not all, into the process, obviously, as we move forward. And thanks again for your good support.
Appreciate your
for that.
consideration, Mr. Chairman. Thank you.
Welcome, Mr. Young, to the hearing. Mr. Young, did you have a comment real quick before Mr. Lukemeyer?
It's just a pleasure to be on this committee with all of you. I yield.
Thank you for that. Next, we have Mr. Barr, gentleman from Kentucky. We thank you for joining us, another member of the Financial Services Committee and another leader on these issues. You engaged deeply with this subcommittee last year. We thank you for that, and look forward to hearing your testimony that you have today. And we know that you've submitted something for the record as well, which has been recorded. But the next 5 minutes are yours to use however you wish. Mr. Barr, thank you.
Thank you, Mr. Chairman, and Ranking Member Cartwright, thank you. Good to see all of you all here. Thanks for the opportunity for giving me a chance to talk a little bit about a couple of ideas for your appropriations bill. There's two bills in particular that I believe should earn your consideration for inclusion in the 2019 FSGG appropriations package. First, the Taking Account of Bureaucrats Spending Act, known affectionately as the TABS Act, and the Preserving Access to Manufactured Housing Act. As appropriators, you know that one of the most important powers of Congress enumerated in the Constitution is the power of the purse, which is the most effective tool available to the legislative branch to hold the executive branch accountable. Unfortunately, the Dodd-Frank Act exempts the Consumer Financial Protection Bureau from the appropriations process, instead allowing the Bureau to draw its funds directly from the Federal Reserve, subject to an opaque and arbitrary formula. This arrangement means that the Bureau will draw about $6.7 billion over the next decade without the approval of Congress and without any oversight of how that money is spent. Our oversight in the House Financial Services Committee has exposed some abuses because of this. This deprives Congress of its most important oversight tool, the power of the purse, which, as Madison wrote in Federalist number 58, may in fact be regarded as the most complete and effectual weapon with which any constitution can arm the immediate representatives of the people for obtaining a redress of every grievance and for carrying into effect every just and salutary measure. The Taking Account of Bureaucrats Spending Act would put an end to bureau extravagances and bureaucratic overreach that come at the expense of our constituents by establishing for the first time Congress's proper oversight of this federal agency. Specifically, the bill amends Dodd-Frank to limit the authorization of the agency and subjects the Bureau to the annual appropriations process. Congress and the American people deserve a say in how much taxpayer money the CFPB gets, how it spends it, and whether the Bureau is fulfilling congressional intent and whether it warrants reauthorization. No more blank checks to the CFPB. Now for the second bill. Affordable housing is of critical importance to families across the nation, but today's federal regulations are making access to manufactured housing more difficult to obtain. This is particularly concerning considering that 45% of current manufactured homeowners have an annual household income of less than $30,000. 13% of manufactured home owners are retirees, and 15% of owners are unable to work or are disabled. To these people and others, manufactured homes offer value at a price that can't be beat. The fact that our government has regulations in place that stifle their ability to purchase a manufactured home is frankly appalling. Earlier this year, a hospital worker in Kentucky applied for a loan of $38,500 to finance a manufactured home. He had an 8% down payment. His monthly income was $2,200 a month, plenty to cover the all-in housing costs of $670 per month. The payment for his own home would have been less than what he was spending on rent, but he was unable to get financing. He contacted his local banks and credit unions, but they no longer financed manufactured homes. So why are the lenders not lending? First, the CFPB has a definition of high-cost loan that fails to take into account the fact that the fixed costs associated with purchasing a house do not change relative to the cost of the housing. In other words, points and fees on a $70,000 manufactured home will likely be similar to the points and fees on a $400,000 home. Nonetheless, the current definition discriminates against manufactured homes, and the banks, credit unions, and other lenders are following the rules set forth by the Bureau. Second, the government's definition of loan originator is limiting the ability of manufactured housing retailers to help potential buyers find the financing they need. Thus, because potential borrowers are getting less help in finding potential lenders, fewer manufactured homes are being purchased. Now, this second issue is included in the bipartisan Senate-passed Financial Services Regulatory Relief Bill, and we think and are hopeful that that will ultimately find its way into law. But the first problem associated with manufactured housing lending, that still is not addressed by that package. So we think that that is the loan limit issue needs to be addressed in the appropriations bill. So again, the legislation that we're referring to here is the Preserving Access to Manufactured Housing Act. It will fix these problems. It will make it easier for Americans to afford a manufactured home for themselves and their families. Inclusion of this bill in the FSGG 2019 appropriations package would end the practice of the federal government protecting people right out of home ownership. And instead, more Americans will have access to affordable manufactured housing again. We all believe that greater access to affordable housing is something that all of us, Republicans and Democrats, can agree on. And again, I thank you for the opportunity to speak today, and I'm more than happy to answer any questions about either proposal. Thank you, Mr. Chairman.
Gentlemen, yeah, thank you for joining us today and for you've been steadfast on these issues, and I share your same concerns. We had the director of OMB before us last week in the Financial Services Subcommittee and Appropriations, but for the first time ever, we actually had the director of CFPB before us, and he shared some of the same concerns about being under our oversight and how currently that is not the case. So I'm in agreement with you on that, and I think there's members of this panel that are as well. But thanks for your good work on this. See if there are any questions from Mr. Cartwright or comments. Mr. Young.
No, just a comment that a longer an agency develops a culture where they're not accountable to anybody, that deepens, and they can become renegade. And the only way to draw that back in is to have that oversight, and that's Congress, and using their funding as a leverage tool, and that's ultimately accountability to the taxpayer as well. And so I wholeheartedly support what you're doing with the TABS Act.
Thank you, Mr. Young. Can I respond to that really quickly?
Yes.
I would say that that should, for all of us, be a bipartisan concern. This is not at all and it should not be a partisan issue. It's really an issue of defending the institution of the legislative branch. Administrations come and go. Some of us prefer the current administration. Some of us, maybe on this side of the aisle, prefer the previous administration. But in both cases, we have abdicated our oversight function to the executive branch to basically run itself. Republicans may like what's going on with the CFPB right now. Democrats may not. Similarly, in the previous administration, Republicans may not have liked what was going on with the CFPB. Democrats may have actually liked what was going on. But in either case, we, as a legislative body, should have oversight. And I think that's where we can get a bipartisan agreement on this reform proposal.
Thank you. Chairman yields. Mr. Cartwright.
Mr. Barr, I appreciate your comments and your testimony, and everything that you have said, I understand and it makes sense. But I guess the larger question I'm wondering is there not a role for a truly independent body? I mean, we want, and there are such bodies, like the Fed, for example. There are those who are running around saying audit the Fed and let's get control of the Fed. But I think it's for the very same reason, because of the frustration and not being able to control that body. How do you feel about that?
Well, I actually support legislation that would bring the supervisory regulatory functions of the Fed also under congressional appropriations. I believe in independence at the Fed, particularly with respect to monetary policy. I respect the fact that we have independent regulatory agencies. But what makes the CFPB unique is that unlike other independent regulators, like the Securities and Exchange Commission, for example, this is not a bipartisan commission. This entity is a single director accountable to no one, a five-year term, and even the president that appoints the director cannot remove this person without cause. So there's restrictions on removal power. There's restrictions on congressional oversight because we don't have control over we don't have power of the purse over this entity, and there's even limits on judicial review. So there's just a lack of checks and balances that our founding fathers envisioned with any agency.
Not to cut you off, but do you think that that problem arises to the level of a constitutional violation?
I do. I used
Has
to.
that been litigated at all?
It has been litigated, and a district court in the DC District Court has actually struck, a federal judge struck down the structure of the CFPB as unconstitutional. That was appealed, but the question has not ultimately been taken under consideration by the U.S. Supreme Court. My view is, and we all have a responsibility in the Congress to assess the constitutionality of the laws that we
Don't wait
pass.
for the court.
Not just the courts. My personal view is that the structure of this bureau is unconstitutional. There are such entities as independent regulatory agencies that I believe do satisfy constitutional scrutiny. I do not believe this one is one of those.
And Mr. Cartwright, I don't think Mr. Barr is advocating for the abolishment of the CFPB, just the oversight of. So many of the other independent agencies are under the oversight of Congress through other authorizing committees. They come and testify before. But as the director pointed out last week, he has no legal responsibility to do that other than to appear. But he's
He
not
did point
legally
that out.
required to respond. And I think Mr. Barr is just saying there should be an act of response and the ability to question and give a little bit of direction. So
Right.
Gentlemen's points are well made. Let me see if Mr. Bishop has any comments. Mr. Barr, thank you very much. We appreciate your advocacy here, and I think you know last year this same provision was carried within this bill, and we'll give it the same consideration as well this year. Appreciate Mr. Cartwright's comments as well.
Thank you. Thank you.
Next, we'll have a gentleman from Colorado. Mr. Tipton's joined us as well. Mr. Tipton, this is a very casual opportunity for you to share a concept with us. We want to thank you for bringing this before us. We've had over 2,000 unique requests towards this Appropriations Subcommittee bill, and yours is one of those. If not, I think you might have made a couple of requests as well. We want to thank you for that because you're bringing a unique idea to us, and we want to give it full consideration. So thank you for your 5 minutes of presentation here, and we look forward to hearing from you.
Well, thank you, Chairman Graves, and I want to thank the committee as well for this time, and frankly, all the hard work that you all are doing. I know it's a tough lift to be able to address, and I'd like to be able to start out by saying that I really support the idea of being able to return to regular order in the appropriations process, and I'm encouraged by the work that this committee is doing to be able to get Congress back on the right track. Our current system of dysfunction on spending measures will leave a wealth of uncertainty for our future generations, and I firmly believe that the way to be able to mitigate that uncertainty is going to be through an open appropriations process where all 12 appropriations bills are debated and passed, and obviously encourage our Senate counterparts to be able to do the same. We must also make sure that we provide certainty for the future generations that their way of life will be preserved as well. There are two federally funded initiatives that will help our communities now and in the future. They're the Community Development Financial Institutions Fund and the High Intensity Drug Trafficking Area Program. The CDFI Fund plays a unique role in generating economic growth across the United States, and especially in my district in Colorado, by fostering and creating and expanding capacities of community-based financial institutions that specialize in providing affordable credit, capital, and financial services. The CDFI Fund builds businesses, creates jobs, and revitalizes neighborhoods. One CDFI-backed institution in Fort Garland, Colorado, for example, which is in my district, was able to finance a small grocery store in town. And while this may not seem like much to many of us, the presence of a grocery store can make a huge difference in a rural town. Because of the CDFI was able to use the fund's Healthy Food Financing Initiative, the small rural community of Fort Garland now has significantly improved access to fresh, healthy foods. This happened to be a grocery store I had the opportunity to be able to tour. Small town. Those couple of jobs, this couple of part-time jobs, I don't think we can overstate in those communities. The impact of the CDFI having on those rural communities is obviously encouraging to economic growth, and I would encourage the committee to continue to support the program, especially as it serves to benefit home buyers, small businesses, and families and communities across our country. And I'd also like to be able to talk about something that's impacting many of our communities across the country in terms of drug trafficking. High-intensity drug trafficking area program called HIDA is a critical tool utilized throughout the United States by local law enforcement and officers to be able to combat drug trafficking and dealers. In my district, the HIDA has enabled local law enforcement officials to yield big results in pursuing drug cartels and help control the inflow and movement of illicit substances, particularly in Pueblo County. In addition to Pueblo County, there are 4 HIDA designated counties in my district: La Plata, Mesa, and Garfield, and Eagle counties. By expanding the resources to these communities, our smaller law enforcement agencies receive crucial assistance in combating illicit actors. In addition, my office is also working to extend the HIDA designation to two other counties in the Four Corners region of Colorado to further improve law enforcement's ability to combat cartels that are active and well established in the area. The HIDA program makes our communities safer and helps reduce the amount of violent crime that is often associated with narcotics activity. I understand the federal resources are limited, and I appreciate your consideration for my request for continued funding of both of these programs. The programs functions as an active benefit to our communities in my part of Colorado and would encourage your support.
Thank you, Mr. Tipton. And you bring up 2 very important topics, and I want to thank you for your commitment to small business and investment in local communities, but also safe communities. The CDFI grants that you referenced represent the #1 request we receive from all members, Republican and Democrat. In fact, 14% of all the requests relate to that. So thank you for that. And in the top 5 as well would be the safer communities and investments against illegal drug distribution and use. So you represent a lot of Congress here with your interest today, so you can be assured these will be taken into deep consideration as well. Mr. Cartwright, any thoughts or comments?
No, I want to thank you for appearing before us today and for your testimony. I appreciate it.
Thank you.
Mr. Bishop.
Likewise, I'd like to thank you for your testimony. I don't have any questions.
Great.
Yes, thank you for joining us today and bringing these ideas forward. We spoke before you came in at how this is a great opportunity for authorizing committees to work with the Appropriations Committee to advance some of these ideas. So thank you very much,
Great.
Mr. Tipton.
Thank you, Chairman. Thank you, gentlemen.
And for the subcommittee here, we had another submission or request to attend who cannot join us because of another conflict. I think it was a markup was scheduled, Mr. Snyder. So without objection, we will forego that testimony, but I think you have it printed in your material here that you're welcome to read. But I thank everybody for participating today, for the bipartisan feel here of request and also input. So with that and no other members before us, we'll adjourn.